Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Apple Hospitality Reit Inc. Annual Report. Apple Hospitality Reit Inc. is a leading real estate investment trust that specializes in upscale hotels across the United States. The company boasts an impressive portfolio of 217 hotels with over 29,600 guest rooms spread across 37 states and the District of Columbia. The company's hotel portfolio is comprised of several prominent brands, including Marriott-branded hotels, 96 properties, Hilton-branded hotels, 115 properties, Hyatt-branded hotels, 5 properties, and 1 independent hotel. This diverse range of brands allows Apple Hospitality to cater to a wide array of customers, from business travelers to leisure seekers. By concentrating on industry-leading brands, Apple Hospitality has established itself as a major player in the hospitality industry, providing a comprehensive range of services to its guests. The company's extensive portfolio and commitment to quality make it an attractive option for investors and travelers alike. The stock price of Apple Hospitality Reit Inc. has experienced a decline of around 9.6% in the past year, according to various sources. This drop is not attributed to a single event, but rather a combination of broader market and sector-specific factors. One key factor contributing to this decline is the valuation of listed REITs compared to their underlying real estate holdings. As investors reevaluate the risk and required returns for income-focused REITs, Apple Hospitality Reit's position within the U.S. hotel and lodging sector has come under scrutiny. This has led some investors to reassess their investment in APLE. Another factor is the company's underperformance relative to its peers over the last year. While quarterly earnings reports have shown Apple Hospitality Reit meeting or exceeding analyst expectations, this has not been enough to offset the decline in stock price. Analyst rating changes have also played a role in shaping market sentiment and price trends. Downgrades from Bank of America and mixed signals from other analysts may have contributed to the sustained reevaluation of APLE's position within the real estate market. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. On the growth side, acquisitions and dispositions of hotels, as well as the development of new properties, contribute significantly to revenue expansion. The recovery of possession of previously lost assets also plays a crucial role in boosting revenue. Furthermore, an increase in room occupancy rates and average daily rates charged, coupled with growth in food and beverage sales from group functions and restaurant/lounge operations, drive overall revenue growth. On the other hand, several factors contribute to revenue decline. A decrease in occupancy rates and revenue per available room, RevPAR, negatively impacts revenue. Additionally, overbuilding of hotels in certain markets leads to an oversupply of rooms, resulting in decreased demand and revenue. Competition from other hotels and lodging alternatives also hampers revenue growth. Government shutdowns and their impact on government demand further exacerbate the decline in revenue. It is worth noting that some factors have a neutral effect on revenue. For instance, there was no significant change in average daily rates, ADR, over the period. However, impairment losses on hotel properties did occur, resulting in financial losses for the company. Overall, these drivers highlight the importance of strategic planning and adaptability in navigating market fluctuations to achieve revenue growth or mitigate decline. The net income of the company experienced a significant fluctuation between 2023 and 2025. In 2023, it increased by 20.6% compared to 2024, reaching $177,489. However, in 2025, it decreased by -18.1% from 2024, resulting in a net income of $175,364. This decrease can be attributed to the decline in adjusted hotel EBITDA and an increase in expenses. The profit margins also underwent a change during this period. The FFO, funds from operations, as a percentage of net income decreased by 23.9% in 2024 compared to 2025, while MFFO, modified funds from operations, as a percentage of net income decreased by 24.4%. Additionally, the operating income margin decreased from 20.5% in 2024 to 18.3% in 2025. The The reasons behind these changes can be attributed to several factors. The impairment losses on hotel properties, due to indicators of impairment such as potential losses from operations and general economic declines, contributed significantly to the decrease in net income. Furthermore, an increase in expenses, including a -24.1% decline in general and administrative expenses, also played a role in this change. The company's financial performance is a notable aspect of its overall success. According to the provided references, there is conclusive evidence that the company is generating positive operating cash flow. This is explicitly stated on page 8 as positive operating cash flow. Yes. Furthermore, page 33 confirms this by stating that the company generated positive operating cash flow. The data also supports this assertion, with net cash provided by operating activities increasing over the past 3 years. In 2023, the company reported $399,044 in net cash from operating activities, which rose to $405,350 in 2024 and peaked at $370,222 in 2025. This upward trend indicates a consistent ability to generate positive operating cash flow, a key indicator of financial health. The company's debt level and interest expenses have undergone significant changes between 2024 and 2025. According to the extracted summaries, the debt level has increased by $67 million, from $1.471 billion in 2024 to $1.538 billion in 2025. This represents a 3.6% increase over the same period. The interest expenses have also seen an uptick, rising from $77.7 million in 2024 to $81.5 million in 2025. This marks a 16.7% increase, indicating that the company is paying more for its debt obligations. The entry of new term loan facilities and the repayment of existing ones are cited as reasons for the increased debt level. Overall, these changes suggest that the company's financial situation has become slightly more burdensome due to higher interest expenses and a growing debt load. Management's primary objective is to maximize shareholder value through long-term growth in cash available for distributions. To achieve this, they will pursue selective acquisitions, franchising, and proactive asset management. However, the company may face challenges due to geopolitical uncertainty, economic downturns, and changes in consumer behavior. Renovation costs, ground leases, and real estate impairment losses are also potential risks that could affect profitability. Additionally, accretive hotel acquisitions may be difficult to secure due to competition from other investors. Management is concerned about obtaining financing on favorable terms, debt refinancing issues, compliance with financial covenants, and cybersecurity risks. The company's status as a REIT may hinder growth by forcing it to forego attractive investments or require significant distributions to shareholders. Furthermore, management reserves the right to change or suspend distributions at any time, which could have a material adverse effect on the market price of common shares. Despite these challenges, management is committed to evaluating property performance and transferring management responsibilities to improve efficiency. They are also prepared to adapt to potential macroeconomic factors. The company plans to use future net proceeds for general corporate purposes, including acquisitions, repayment of indebtedness, capital expenditures, and working capital. The company has made several significant acquisitions and divestitures in recent years. In terms of acquisitions, the company has purchased 2 existing hotels, a Homewood Suites in Tampa, Florida with 126 guest rooms, and a Motto Hotel in Nashville, Tennessee with 260 guest rooms. Additionally, it has entered into a contract to potentially purchase an AC Hotel in Anchorage, Alaska with 160 guest rooms. The company is also developing a dual-branded property on its own land in Las Vegas, Nevada, which will feature both an AC hotel and a residence inn. This development is expected to be completed and opened for business by the second quarter of 2028. On the other hand, the company has made several divestitures, including selling 7 hotels in 2025 and 6 hotels in 2024. Furthermore, it recorded impairment losses on 2 properties in 2025, totaling $5.7 million, and 3 properties in 2024, totaling $3.1 million. These transactions demonstrate the company's strategic efforts to optimize its portfolio and focus on high-growth opportunities. The company has a history of paying dividends to its shareholders. This is evident from the documentation found on pages 32, 83, and 88, which confirm the payment of dividends. On the other hand, there is limited information regarding share buybacks. However, it is noted that shares have been repurchased under an authorized program, as mentioned on page 36. There are concerns about inventory buildup. However, the primary concern lies with supply chain disruption. This is due to various factors such as global tensions and inflationary pressures that have led to shortages of materials and supplies. Supply chain disruptions pose a significant threat to businesses, particularly in terms of cost overruns and delays in renovation or development projects. Inflationary pressures, supply chain shortages, or tariffs may result in increased costs and delays for anticipated projects. That concludes the financial summary for Apple Hospitality Reit Inc. Feel free to comment below, and I will be happy to answer them when possible.